Okay, let's do a little mic test here. All right, it's good. So, gonna do a little charting today, and I might just peruse until more people get on. Or if you're, I have no idea who's viewing the channel. If you're here, at least maybe say hi. If there's something you want me to chart, I'm more than happy to chart anything on this quote board or watch list, however you want to say it. I'm gonna drink some of my chicken soup here. Well, hello, Kawi. What's up, W35? I hope you're having a fantastic Sunday. It's Sunday for me, depending on where you are in the world. It might be Monday. Is it Monday in Australia somewhere? I bet you it is. Oh. So up here we have equities, bonds, energies, metals, currencies, crypto, and ag. Oh, cool, Wes. Wes, you're 30. Are you 35 years old? W35. There's a little delay on this live stream. I think about 8 or 9 seconds right now. Any lower than it tends to I don't know, kind of chop up. I wish. Me too. I'm 42 years old. Um, 35 was an interesting time, but I wish I was younger. But it's all good. Let's see. We don't need this on the chart. Let's get rid of it. Bink. All right, there we go. We can X out of here. Oh. This is just a footprint here of oil. We'll do an automatic scale. There we go. Clearly in a downtrend, isn't it? Short term. Short term. Going on 46. Nice. So I'm mainly going to start with the NASDAQ and, well, first ES and then the NASDAQ. And what I'll do is I'll start from like a weekly TPO. Just find some areas of interest, and then I'll go to the daily TPOs and zoom in a bit there, find more areas of interest, and then I'll end up looking at a daily candlestick chart, hourly candlestick chart, and then all that'll just get overlaid onto my short time frame charts, which you guys will kind of see, but I'll switch screens and stuff like that. So anyway, this is kind of one of my main screens here. Off to the left, I actually have DOMs, but you know, this is like my main instrument cluster. You know, I look here at the settlements of the last 2 days. So T1 is the last settlement. T plus 2 is 2 days ago. And then I look at settlement volume, and that's what SVOL stands for. And then I also look at the opening 30-second volume for just the last session. I don't go 2 sessions back. I just look at either the current session or the last one. Like, so for example, this EST1 opening VWAP 30 seconds volume is the opening volume for Fridays, right? And then if we're on Monday and it's past the opening 30 seconds, then this would just be looking at the, you know, sort of Monday's session, 30-second. And I do that for the NQ. It's more relevant for the NQ than it is the E-mini, because the NQ does, I'm not sure if you guys know this, but the NQ typically does more volume at the open than it does the close. And so the NQ's open tends to be highly, highly reactive, as opposed to, I mean, the close is reactive as well, you know, because the close is important, especially the E-mini does a lot more volume on the close than the open, as you can see here, right? The opening 30-second volume for the ES is 10,000 contracts, whereas the close was 52,000. But you can see here for NQ, the close is 4,200 and the open is 3,200. But if you include, say, the first 5 minutes, then the NQ's, or even 10 minutes, the NQ's volume is higher. And a lot of times this opening volume will be higher on the NQ than this NQ T+1 settlement volume, the last 30 seconds of the cash session. This sort of light, this teal, kind of faint teal color, will actually be, this number will be higher than the settlement volume for NQ. So these are things to kind of notice. What's going on, Dave? In your trading is where is volume highest on what you're trading, right? And you can typically mark those levels because traders will defend where they bought or sold at that level, and then you get a sort of play off of those levels, right? And so wherever volume is highest in the shortest amount of time, yeah, that shows interest. So the close is always important, or settlement, right? So let's see. And then in the background here, I show the NQ Nice Amex tick. So that's what these bars are here. And then you can see that I'm doing like a shade below 3,000, negative 3,000 ticks, shade everything blue. So potentially it's a reversal signal here, and then this is potentially a reversal. And it could also be a breakout signal in the direction of the market, or it could mean that the market's oversold, right? And that's, a lot of that is context dependent. So I have the same red shading at the top, and then this area here, when it gets to negative 3,000, this whole bar lights up blue and says negative 3,000. When it gets to negative 3,500, the shade of blue, the background, gets brighter. And then on the upside, when you're above 2,000 ticks, this is like a dark red. And then when it gets to above 3,000 positive ticks, it lights up, or the shade of red gets brighter, right? So these are like signals that you're either in a strong breakout or it's a little FOMO-ish, right? So that's why I say this is kind of my main instrument cluster, almost like a car or something. So anyway, this is the NYSE tick, NYSE advanced decline, NQ, NYSE, and Amex all combined advanced decline, right? The same thing, the tick. So this tick reading here corresponds to these bars that you see in the background, right? So, and that's just redundant. And then obviously this is the DXY, or the dollar index, and it's the ICE dollar index. So it is the DXY that's based on the 7 most traded by volume. I think it's like JPY, GBP. I mean, you can look up ICE index constituents or something like that, and you can read about it. But anyway, that's DXY, and obviously when the dollar is very, very strong or very, very weak, sometimes you'll get inverse correlation. Again, sometimes, not always. And then here, up here, this is the ES, the red. So this is the ES line on close, 30-minute. I guess, yeah, 30-minute. Every 30 minutes, this line closes and then prints. And then this is the NQ here, right? So we get to see how they're moving relative to each other, which one's stronger, which one's weaker. And then these orange lines are settlement lines, right? And you can see how we get liquidation breaks below settlement, and then sometimes settlement acts as support. You could see here's settlement, right? Dipping below settlement, acting like support. And then, once you break settlement, whoop, right? So stuff like, and then settlement, right? Once we broke this whole level here, right? Settlement became support, and we moved up from it. Here we closed on highs on fairly high volume, right? So this is not one, two, this is like 4 settlements ago, so it's not listed in this instrument panel here with all the settlement volumes. But you can see up here that once we closed on highs, it put pressure on the buyers to take it higher, and they couldn't. So we kept rejecting at that close or that settlement, and we eventually pushed down off of it, right? So, you know, closing on highs or lows puts pressure on the opposite. So think about it from this perspective. When we close on lows, like here, who's the pressure on, right? To continue to take the market lower, especially if it's on volume, right? So if this is on really, if this settlement here, which emanates from right here, was on extremely high volume, and it was on the lows, then who is essentially being squeezed here if they don't take prices lower, right? So on high volume means someone absorbed. If they're not able to take it lower with conviction, what ends up happening, right? It means that the buyers had very good location. Even though it was passive, it was on the lows at the close. And so the sellers have to take initiative and take it lower. Well, they couldn't. And so from here started a massive, massive rally off these lows. So likewise here, we closed on highs on volume. So now the impetus is on the buyers. Well, if they can't take it up higher, you're likely going to get a lot of those guys spitting out because they have what? Poor location. There's buyers and there's sellers up here. It's not just one way, right? Right? If you're buying on highs way up here after a big rally, now the impetus is on the buyers to take the market higher. So we don't do that. So anyway, a little bit of settlement theory. Lucky Prod, what's going on? Yes, I had an excellent week last week, and an excellent trading Friday. It couldn't have been any better, to be honest. It was just, I was patient. I took the right trades. I mean, it was, as I mentioned on Twitter, I was barely getting out break even, but I was recognizing when to get out. So I was winning on all my trades, even though my risk reward was skewed. And it could have been bad, but I was also, using my experience to get out of the market when I recognized it wasn't doing what it should. And so I did catch some pretty big moves to the upside at the end there, so it was good. So yeah, I was really happy with my trading this last week. My equity curve was very smooth, and to the upside, it wasn't overly big or anything like that. But I don't know. It was solid trading. So yeah, the end worked out very well. I actually thought it was going to go to 50, but you could see that there were sellers just eating up everything the buyers were throwing out. And it is interesting to consider, right? Look at these. So I failed to mention, we have these settlement volumes here, 52,000 contracts here for T1, which is the last 30 seconds of the cash session trade, right? And these bars basically look back at the last year and compare the volume to what's normal. So this is an above average close on T1. Same with, T2 is obviously maxed out because that was end of month, but it was higher than a usual end of month settlement. Oh, I hear a fire bell out there outside my window. Okay, so we actually, and if you look at T1 and T2, they're both on very high volume, and they're only 9 points apart. So I should have considered that because I got a little long into the close looking for 50, and we just never got it. So I ended up taking off. So it was still a winner. But I should have considered all the volume that has transacted here at these settlements the last few days. Hey, Jonathan. Nice to see you, buddy. Do I trade? So Dave asks if I trade the ES mostly, and it depends. But overall, for the last year, many years, yes. But I traded a ton of the NQ this week, just because I was really liking how it was moving and it was a little more volatile. And I was understanding how it was moving through levels on the footprint, right? So for whatever rhyme or reason, it made a lot of sense to me this week. Sometimes we struggle. Oh, cool! I got a delivery. Let's see what it is. I have this green tea that I ordered. Let's see. Track that shipment. I have this green tea that I ordered out for delivery. That's gotta be it. But that would be a really early delivery. What the heck? Alright, I gotta go. I'm just too curious about this green. I paid a pretty penny for this green tea. I'll be right back. Bummer. It's from Target, so it's my wife's. Anyway, I paid a pretty penny for this green tea, so I'm excited to try it. Anyway, what was I talking about? Yeah, just with lots of volume. Between 30 and 39, I should have known that it would really struggle to break away from that area right away. So, oh man, more chicken broth. I'm doing like a 36-hour fast, and one of the things that makes fasting hard is when you get electrolyte imbalance, right? So lack of salts and stuff like that. So a little chicken broth helps. Let's see. So Millennium, I'm sorry, Miller Might 451 says off topic, but how are you getting 2 data feeds at once? I think I need to make this browser much bigger. So I have my glasses on. I still can't see anything in the chat. So DXY is just part of the Sierra chart data feed Miller Might. So it's not 2 different data feeds per se. It's just part of the standard Sierra chart Denali data feed. So you can get that all at the same time. Let's see here. Okay, so anyway, I should have known, but so with these being relatively high volume closes, they're going to be sticky, right? And so we can see that right here, right? These are only 9 points apart, right? So this settlement here, and then this one up here. So this is going to be a sticky area. It's going to provide some really, I think it's going to provide some nice trading. So anyway, I'm going to switch screens real quick here, and we're going to go up to, we're going to do the right 27-inch screen here. And we're going to go into the E-mini on the weekly, expand it out a little bit, and start looking at some of these levels. I cleared most of these levels before I got on. So anyway, I see the chat lighting up over here. Captain Price, the tick, nicey stuff is all part of Sierra Chart's data feed. It's not, you don't pay extra for it. And those are like, if you just search Sierra Chart and search, I think it's called like market stats, I think, will get you everything that is included in their standard data feed for Denali, then you'll find everything that they list, and there's quite a few actually. Jonathan says, I used your footprint chart the past couple of weeks after watching it 2 weeks prior. My entries have been amazing, but not my exits. Still green, but it will run 100 to 300% profit. You know, Jonathan, that's the bane of my trading, is that I do get pretty good entries a lot of time, and I don't let them run. But here's the problem, is if you start letting every single one run, let's say most of your stops are 1R, meaning let's say you have a 3-point stop loss and a 3-point take profit. If most of your setups are something like that, and then you start holding for 2R and 3R, your probability of success will go way down, right? That's just how trading works. You'll see the markets are very efficient like that. So you got to keep that in mind, that your win rate is going to change significantly for those R's. And there are good setups. There are like great setups that will get you 2R and 3R, but they're more rare. When they're so you'll have also less activity in the market if you only wait for super high probability 2 and 3R setups. And if anybody else tells you differently, that they can find those all over the place all day long, well then they should really be trillionaires. They should have cornered the whole market in a short amount of time. But that's just not trading. We all know that's pretty unrealistic. So anyway, let's see. By any chance, are you order routing with Teton? I am not. Let's see. Yeah, Captain Price. If you have Denali, you can make it work. Market stats. Okay, I wasn't sure. I always call it market internals, but you know, these are market stats. Do I have to pay extra for VIX? So Chris, yes, you do have to pay extra for the VIX index. So on Sierra chart, well, on Sierra chart for the cash CBOT indexes, you would have to pay for the additional Sierra chart data feed, which is $25 baseline, and then that index is another $10. So that's an extra $35, I believe. I don't know. I don't work for Sierra chart. I'm just going off of memory. But check out their website. So that's for the cash index, you know, ticker symbol VIX, right? And I used to pay for it, but I don't anymore. However, if you want to do the futures VIX, which is, you know, slash, if you're on, say, Thinkorswim, slash VX, right, and then the month and everything, you can simply add that for, I don't know, a few bucks if you don't want any market depth, and if you do want market depth, maybe a little more than that, $5 or something, I don't know. And then that would just be added to the Denali. It's a futures data feed, and that would include all the VIX futures, so you can kind of get VIX that way, although there is typically a little difference between the cash you know, index VIX, not VX futures. So you can do it that way. So anyway, hopefully that answers your question. So yeah, Lucky Prod says VIX is $5 a month. If only, Lucky Prod. That's a little misleading. So anyway, hopefully you just understood what I said there. Maybe I should bring it up. Well, no, I'm not going to bring it up because then I'm going to show you all my... Yeah, exactly. VIX VX futures is $5. So Lucky Prod just clarified what he said up there. And yeah, so we're good there. Oh, Captain, I run toss all day long. I mean, I have money there and I trade out there, as well as Interactive Brokers right now, because Interactive Brokers just has much better short locates and more shortable shares and stuff. I mean, toss is terrible for that, but I really like toss's interface and the ability to. So I look at a lot of economic data through like Fred, and you can integrate that all with toss, right? So anyway, I do both. But okay, I'm gonna go ahead and look at. This is ES on the weekly. It's on a totally different screen, so I'll probably talk for a bit without looking at the chat. The chat is on my far left screen, and if you guys know, I have two 49s in the front, and then a 27 on each side of those. So now I'm, totally looking the opposite way. So I'm not going to see the chat for a little bit here. So this is a weekly TPO chart that is shaded according to. So what is brightest in the shading is the most recent in time. So that's what this shading is representing. So this dark means it was early in the week. This light means it was later in the week, right? So this is middle of the week price action, right? Beginning of the week price action, end of the week price action, right? As light as it possibly can be. The red is the value area. It's the value area is based on volume in the TPO. So this is 70% of volume. It's not based on time. So even though it's a red value area in the TPO, it's not the value area based on time. It's based on volume. And then this right side profile is volume profile, and the orange is just considered higher-ish volume, right? It's probably something like represents something like 70% of all the volume. So it's fairly high. It's definitely not a value area high or low. It's just total 70% of volume, right? And that highlights in a way that is relevant for me for volume edges and stuff like that. So that's how the orange is or how it's colored that way. And then this orange here is the volume point of control for the week. And then this thick extending white line, right? You can see it in the profile, is the time point of control. So the sort of the widest area of the profile, meaning the most amount of time spent, right? So, you can have the most amount of time not equal the greatest volume for the week, right? And so then you'll get something like this, where the most volume for the week is here, but the market spent the most amount of time up here, right? And so sometimes you can derive something from that, right? There's the market spent, say, a lot of time here, but buying interest was very high here, right? But the market may be balanced in this area on this. I mean, this is a pretty balanced profile. It's not like this, right, where you get sort of very sort of these single prints. So anyway, what I like to look at, and then let's see what else. The single prints on the weekly are denoted by these dotted lines here. Let's see. Let me make sure about that. Yeah, single prints. Yeah, single prints, single prints, single prints, single. Yeah, that's right. I hardly look at those on the weekly. I typically look at the single prints only on the daily, which is why the heck do I have them up on the weekly? Well, if they're up on the weekly, it kind of just alerts me to go maybe take a closer look on the daily. So that's it. And so this will overlay onto my daily charts, my 5-minute charts, footprints, my volume bar charts, which are 1,000 volume for ES, 500 volume and Q. This will overlay onto my, let's see, will it overlay onto my hourly candles? No, it will not overlay onto my hourly candles, nor will this overlay onto my daily or weekly candlestick charts, right? Those daily and weekly candlestick charts will overlay sort of to the lower time frame, right? So things get a little messy if they're overlaid onto too many charts on the higher time frames. So let's see. And this is all just one instance of Sierra chart, right? And I'm sharing all these charts, chart drawings with each other. So, and I'm running this through Linux, which on Linux, when you run one instance with a bunch of charts, at least for me, my performance has been better than on Windows. So that's why I do it this way, and also for the purpose of not only is it better performance, but I get to share all my chart drawings, and I don't have to have sub instances and I don't know, run some sort of copier for chart drawings. It's just all very simple, right? Where I can sort of come in here. Oh, this opened up on the wrong screen. Here we go. We can come in here on the chart settings and go to, let's see, chart drawings, right? And copy chart drawings from chart numbers, right? You can go enter that in here and share between chart drawings, right? So where when I do something on this chart, it does it also on another chart. So it's better if it's all one instance, and then again, I'm being a little redundant. I have the benefit of better performance and sharing all in one instance. So anyway, and there's a bunch of data I think loaded into this chart, and there's no lag or anything. You could see that, right? It's moving really nicely in real time. One of the benefits that I've noticed with Linux. I'm going to look over at the chat real quick. Yeah, Dave. Dave is being answered by Jonathan. Thank you very much. Finishing up my chicken broth here. In X line, Discord is gone. I spent about 3 hours of my day helping people on Discord just about every day. And it was highly addictive, but it was detrimental to me. I couldn't get any of the projects that I wanted to start done. And I had some other projects with other traders that I had been talking about starting for a long time, and I couldn't get to them. So now I'm getting to all of those and more, and focusing more on my own. And 3 hours a day on Discord is just a lot of time, man. It's ridiculous. So I just got rid of the whole thing and said sayonara. And there are other people, I think, from the group that started up. I don't know that if they want me to plug it or not, so I won't plug it. No one has really reached out to me on that. But so the core group, I think, is still together, and they're I don't know. I'm sure they're just doing their thing, having fun. So whatever. I'm happy for them, and I hope it is everything they want it to be, and then some. Let's see. Okay, I'm gonna get back to the chart here because. Goat, can we get your chart books, please? I don't share chart books at all. You want to buy chart books from somebody? Get them from Ticino Trader. He's amazing for chart books, and he's really really affordable. I think he's like I don't know, like 4, 5, 6 euros or something per month, and then you just get everything he has chart book wise, and you can look how he builds them and educate yourself that way. and then and if you want to build some chart books that look like mine, then watch my YouTube videos. But I won't just share them. Absolutely not. So goat, you can pay Tpo Trader, but otherwise you can watch my videos. That's all I'll do. I won't provide any support. You know, many moons ago, I used to share chart books, and you know what ends up happening? Everyone that I share chart books with, they ask me questions about it nonstop, because you have to understand that my chart books are all set up according to my settings that are like based on global graphic settings or global settings, and it won't look the same or act the same on your Sierra chart setup. So you'll end up seeing it like, what the heck? Why is this not working? Right? And then you'll come back to me and like, this isn't working. Why? And I'm not going to want to sit there and provide support to you for something that is just not worth my time. Right? So that's why I don't do it. And then I also just, my whole shtick is I like sharing with people how to build them. And that's what I find interesting. And if you want to go pay for chart books, go pay someone like Tpo Trader, whose chart books are incredible. He puts all the graphics in there in the chart graphic settings, so they work out of box for you on your system. He spends all kinds of time. I mean, I can't believe how much time he spends on all that. It's ridiculous for the amount that he's only charging. So anyway, I'm going to go ahead and do the basics here. I'm going to go ahead and select my horizontal array tool and just sort of look at some levels, right? So this week, not surprisingly, so last week's close lines up with this week's POC, and then all these settlements that are here, so end of month, right? So we're going to go ahead and we're just going to make this so that we know that this is POC and it's an important zone. So I'm going to modify this text, and I'm going to call it VPOC 2 weeks, something like that. Even though it's not the VPOC for the 2 weeks, it's only for the last week and it's the close. We'll just say 2 weeks important. Imp. I'll remember that. That's all I need. All right, and I do a red line because the red kind of denotes that it's from the weekly chart. So that's why I do it. All right, so we've got that one. So here's the prior week's close here. So that's interesting. We have this prior VPOC here that was kind of support, and then the TPOC was just below. So we rotate a little bit into the value here, and a little below the volume point of control for the prior week, and then bounced off of that already, which is about the 4,500-ish level. And so if we look back prior to that, it's also this volume node right in here, right? This volume edge, and then a big volume edge here, right? So we get a little bit of confluence, and then the prior weeks. So when we rotate above and below, back to back, I would discount this week already. But because this is the first time we're coming back to this untouched area from prior weeks, I do look at the rotations into, say, like here, where we come into a low volume node, and then we come back, right? And then, so for this week, we come back and test it back into this area, and then sort of reject. And now so if you look here, right, this is low volume in this area. You see that? Low volume, low time. This is pretty low volume here. Most of the volume for the week is in this area. This is very low volume in here. We're likely to fill this out, I think. We'll just make it neutral. Right, so we're likely to fill this area out in here. Let's see, I'm drawing it a little bit wrong here. We'll go something like, what a fail. I've got to go from the lower. There we go. There you go. We're likely to fill this area out in here because, look, not a lot of time spent, not a lot of time spent, not a lot of volume, little bit of volume here, not much, not a lot of volume, right? Now price migrated up. Okay, now we're coming back. We're filling in volume here, right? So you would kind of expect for volume, and I just see this on a week, to kind of for the next week kind of fill in like this, right? So this next week should fill volume in from here to up in this area, and that's just natural because you get buyers and sellers that say are in profit. If you're short up here, you're in profit here, so you're going to cover, and then if you're in profit here, lots of volume in this area, right? Lots of volume down here, right? Lots of volume down here. We break out of this little balance area, so now longs are taking profit. Maybe you're getting long again. So above here, longs are going to take profit as we go sideways, right? And shorts are also going to take profit. So what ends up happening is you just get typically a balance area that extends into the next week, right? So looking back over prior weeks, the fact that we haven't spent a whole lot of time in this area usually suggests that we'll spend more time in this area for the next week. But markets are tricky. You never know. There might be some news event or some catalyst that drives us higher. So this is in the absence of any major catalyst, right? So we should know that. Let's see, on the upper end, we have a little volume ledge here. So 45.70 will likely be some sort of resistance. So, right? And you got to remember, I'm looking at a weekly chart, and this line is going to show up on my footprint. It's going to show up on my 5-minute chart. It's going to show up on my volume bar chart. So as we come into what was a weekly volume area, that might be a scalpable zone for the short term. Maybe we'll see a 6 or a 7-point rejection off that area, especially if we're ripping intraday and we're way above the 10 and 20 SMAs intraday on a 5-minute chart, and we're getting huge separation from those SMAs. We're a little vertical, and then we get into this area, and then all of a sudden, boom, big passive absorption up here. What will likely happen? That slows down the buyers, and then everyone who bought into that passive absorption because say price, the market has moved a little too hard too fast, then you get a pullback. And if all of a sudden this is on the chart there where that's happening, hey, that's confluence for your lower time frame stuff. I'm going to go back to questions here a little bit. Goat. I mean, when I first started Sierra Chart, Goat says SC gives me a headache. Me too. When I first started Sierra Chart, right away I was looking for pre-built solutions because I felt it was overly complicated and I didn't really understand the way that all the studies could talk to each other and all the settings and it was just overwhelming, right? I'd never seen so many settings. And I'm a long time Trader Workstation, which is Interactive Brokers user, and I know that thing like the back of my hand for the most part. And it's got a lot of settings and it goes pretty deep, but Sierra Chart goes far deeper. And so I was overwhelmed. So I was looking for out-of-box solutions, and the one that worked the best for me was Ticino Trader because one thing he doesn't do for his chart books is he doesn't lock up all the settings so that you can't see them. So when you download his chart books, you get to see how they're built, right? And a lot of them will just work for you because they're they're symbol specific. But you can also sort of deconstruct them and save things and figure them out that way. So that is why I recommend him over and over and over. A lot of these other people who are selling stuff, they're not going to what they're going to have is they're going to have a chart book that doesn't show you all the settings that Sierra Chart normally would for how those chart books are created. And so you're gonna pay some monthly fee and then not even see everything. With Ticino Trader, you're gonna pay a low monthly fee. You'll have the whole chart book, and they're the same as these custom chart books that people are selling that don't show you the settings. That's why I'm recommending him. So. Let's see. Jose, I think I answered your question without even really trying to. I haven't been looking over at the chart because, again, totally different screen. I have like 6 feet of monitors to look back and forth at. So anyway, when I'm talking about this stuff, I'm not looking at the chat. So let's see. What else do we got here? We have this up here. Singles down here on the week. Sorry, I'm just gonna, adjust this a little bit. Look at things with different eyes. So what I'll do, because I'm not going to remember, what I'll do, I'm not going to remember what this is on a chart. So what I'll do is I'll modify the text and just call it like first HVN. There you go. And what's cool is that when you split apart this chart, right, into I don't know, you split like here the letters blocks in their own columns, right here, is you get to see the way price moved and migrated. And you could also see how it's built from darker to lighter, right? But you can see here that we kind of came up, tested, came back down, tested this consolidative region, rejected the next day, came back down, tested again, tried to fill the gap, couldn't, consolidated, then ripped down. So at this point, you got to think that there are traders who are probably getting long into this. Well, let's see if I can put some. See this gap here? There's consolidate. They're probably getting long, thinking the market's going to do this, right? You've had this big, strong move. Well, hey, why not? Just keep buying, right? So if we come back up, let's see where we are. If we come back up to this zone, this high volume node where we broke out from, which is the first HVN, will likely be resistance. If we go a little higher into this zone, so this is the breakout bar here, from here all the way down to here. Here's the consolidation happening in here, and here's the breakout bar, whoosh, all the way down, right? So it covers the whole, all the way through the lows. So if we come, so longs, because this happened quickly, longs all the way in this area where it's kind of orange, it's going to be a massive zone of resistance short term. We're going to struggle to get above this area. And this happens all the time in markets where you get like a highly consolidative zone, right? And price moves in, right? Maybe it peeks its head above the zone, then rejects, and then you get a big bar like that. When the markets revisit this area, it tends to in this area, because this, think about it, there's trap shorts and trap longs. There's always remnants who never take stops. They're just, I'm a bull and I'm going to add down here. So when it comes back up, if it comes back up after a lot of time, they're going to be very uncomfortable when it comes back to this area. So they're going to want to take profit at break even. What does that cause in the markets? It causes pullbacks in the market. So that's just a little bit of theory about as to why I think this will be resistive. Again, I'm long QQQ. I'm long Google. But I don't expect zero MAE all the time. I mean, markets, I'm ready for markets to go lower. That's fine. I'm not full position in my QQQ or my Google on the stock side, but again, I am still long this market, and I just don't have a realistic expectation that I'm not going to always be in profit in my positions. So I despite saying this is all resistive and everything, I'm still bullish on these markets right now. So anyway, for that reason, I think this is going to be a resistance area. So now that I've talked it through a little bit, right? So talking through what I think, I'm going to go ahead and say that this is going to be likely a resistive zone, right? High volume, consolidation, which is what you would expect with a big breakout. I actually call this BBWC, base breakout that had consolidation or with consolidation. So it was consolidative. It was like a base. There was a breakout, and so BBWC resistive, right? So you can look on Twitter. I explain a little bit more about that, but that's so involved, and there's so many iterations of that. But that's the general idea, right? So this is going to be resistance as well, right? So high volume here, right? You can see it's orange. So this whole area might be another nice area to put on shorts, right? So how do I want to denote this when I'm looking at it next week on a footprint and it's covering 12, 13 points on my footprint? Well, I've got to have some text there that shows up on my footprint that tells me what this is. And so I'm going to say it's BBWC weekly, and that's it, right? Because I just explained to you what BBWC kind of meant. Well, I have a very strong idea of what that is in my mind. Okay, so there you go. Now that's going to show up on my lower time frame chart. Okay, so anyway, I've covered some of that. Obviously, this is the highs for the week. I'm not going to cover that on this chart. I'm going to look on my daily TPO chart and look at that and figure it out from there. But you can see a little bit of volume here, and then above, hardly any volume, right? Into the 46 whatever 30 handle. So now I've kind of covered just this immediate area, and now I want to cover more downside, right? Where might there be some potential support? We have no naked volume point of controls here, right? So this is the volume point. This is a weird week, right? Big explosive move to the upside. But we have a naked time point of control, and it's naked in that price has not touched it yet. So we call that it's naked, right? So here, this is still naked. Right? You could see here where this one was naked for a time. When price touched it, it no longer extends past that. Right? So these are areas of high time or high volume, right? Time for the white, volume for the orange, that they're areas of high volume or high time, and they're often very short term for immediate price action intraday, areas of interest that people either like to really sell or really buy, right? Because you'll have stops below, or sometimes it'll bounce at that zone or a little higher as buyers start to get interested. Because again, there was interest before to transact heavily at that level. So people will front run that zone. Now, institutions love to run levels below if the market is very weak, right? So you have to kind of consider that type of price action, that they're going to look for liquidity, stop run liquidity, in order to get short-term players out of their positions most disadvantageously. Meaning, if you're exiting on a stop loss, you're exiting at the market in the worst possible way, and they will likely try and capitalize on that, because initiative or market orders produce movement, right? And that's essentially how the market moves, is that people either hit the bid or they hit the ask, right? And so if you have a market order that takes 2 or 3 points out of, say, the NQ or the ES, right? So up a market order will take up to 6 points on the NQ and up to 3 points on the ES. That's how it works, because there's something called a um, price protection limit that the CME enforces, which is it's to prevent rapid deterioration of price. So all market orders are converted to limit orders at the CME. So stop limit orders with a maximum on the ES of 3 points away from the best bid ask spread, and the NQ at 6 points. So it's like a price protection limit. And it may be called something else, but I'm pretty close on the name, right? I can never remember the exact name of what that thing's called. So, and that just means that people are exiting most disadvantageously, and that produces momentum, and institutions will scoop up in those levels because people are exiting in a way that shows that they're losing the greatest amount of money possible, right? So markets are highly efficient when it comes to these sort of price movements, which is why when you see big stops hit, right, and you get big absorption, price often springs straight back up 1.5 to 2 points, right? So the algorithms are all set up to punish people who are getting out of the market because they've had a stop triggered, right? And so on very short time frames you get punished, but if a lot of stops are hit on a higher time frame, right, and we get what we call liquidation break momentum, right, then institutions love to step in there as well. If it happens on high volume, then you know that a whole lot of people are getting hurt, and if one side is getting hurt, there's also always another side of the trade, or there's always another side that is profiting from that pain. It's not just everybody's getting screwed, right? Look at the COVID declines, right? Incredible volume. You got to remember, it's not everybody's not just a seller, right? For there to be high volume selling, there needs to be high volume passive buying, right? So someone is taking the other side of that trade. So, and big money tends to take the other side of capitulation, because again, that's people exiting, right? That's all that supply exiting, and so anyway, I think I've beat that horse to death. Let me look at the comments here. Maybe people have some questions or comments. Jonathan asks, will this live stream be reposted? Yeah, probably. Unless I do something really stupid. And I'm like, darn it. And it requires editing. I don't have a whole lot of time to edit these days. So maybe it'll be reposted after a while. I'm already an hour in. Jeez. Okay, so let's look at some lower levels here. We have a high volume node here that has not been touched, right? At 4406, there was a previous high on this week here. So I like this level as a potential support, 4405. Like what? 4405? Yeah, 4405. Markets could easily rip down to that level. Markets love to scream straight down. Okay, so let's do this. 4405 with this being a high volume area. This is a high volume edge. So right in here, maybe we'll just do it this way. Right? We'll say that this is potential support from this weekly chart. Right here to here. So we'll modify it and then potential support. And I'll know, looking intraday, that this may not just be a level, right? If we consolidate, and then we come into the week and there's tons of consolidation here, and there's a balance area down here, well, I like to double balance. So if balance is from here to here and then we break out of balance, I'll watch for head fake, right? The fake out and back in. But I'll also keep in mind here that, on low time frames, if I don't see some sort of what I want to see here, which is big buying interest and a rejection and back in, that maybe I want to be looking to go short here and then cover out a double balance or something like that. And what's the next area, right? Big volume through here, lots of time, singles down here. So maybe this becomes an area that I actually sell, right? So just because I have this on a chart doesn't mean automatically I'm going to be thinking I'm going to buy here. Heck no, that's stupid. You gotta look at the context of the, well, I think you should look at the context of the market as everything's unfolding. All right, so that's an area of interest to me. So these are singles on the weekly. I'm not going to mark them up there. Very thin volume here, right? And so I'm going to denote this. And I'm going to denote it by, or just note it on my chart by putting a whole area here. Like, look at all this. I mean, this is just big volume in the prior weeks. Shorts were wrong all the way to this area. So I think this is potential support because they were wrong after all this happened. And then you get this essentially bullish engulfing on the weekly. And I think this is where they really, we already tested it. So if we come back here, I think this area is going to be kind of supportive, right? So we've had a few weeks of bullish movement, and now we were getting a pullback, right? Roughly over 100 points on the E-mini, right? After a 400-point move, so a 25%. I would expect some bounce here, right? At least testing, and you can kind of see this. Just sharing all my thoughts with you guys. You can kind of see this. Look, it's about 50% is that first HVN. Right? Markets love to move in like halfway to the goal, right? Markets love to, move around 50% and then test it, right? So markets like to pull back, and it happens to be this BBWC and all the other things that I explained. So now I'm thinking about, halfway to here, essentially, is what? 50% is right around this potential support. So when I'm putting that there, I'm looking at the structure, but I'm also thinking this is about halfway, and then this is where, this is where shorts were wrong. So they'll likely, if they're still holding here and adding up here, they'll likely want to try to get out here, right? And it happens to be about a 50% retracement, right? So you can kind of see that the structure, and then, about halfway down, or 50% retracement, kind of correlates here, right? But then you got all this thin volume, so we might get some sort of bounce, and maybe we roll over a bit, right? April's do tend to be choppy, even though bullish, so maybe we get that move to shake out some longs, suck some people short. We have maybe some sort of overnight foray back down into the zone, and then whoosh, by the morning it's way up here or something, and then all the shorts are screwed or something like that. I'm thinking about, this is kind of some crazy low time structure here, and I think once we go look at the daily, once we go look at the hourly charts that have gaps and stuff, you're going to see that there's gaps left in the market down here, right? So, just thinking about this kind of thing, and you're like, well, what's going to happen with all of this, right? Are you going to ignore all of this price action? Again, this is a weekly chart. We'll go look at the daily to see some of that, okay? So I'm done with this weekly. All right, let's go look at the daily for the ES. I probably won't finish the NQ with you guys, but that's okay. All right, let's go expand this chart for the daily. Let's go mess around with this. So now you see on the weekly how this kind of looks. So we have singles up here. So we have singles here. Let's see. Yeah, we have singles right here. Super thin volume. So we start to move up here. So this is old singles here from the prior week. I got to get rid of that. It's messing everything up. 325 VPOC, right? So that's what this is, which is why I thought it was an area of interest, and I was tweeting it out on Twitter. This 09 level, area of interest, right? 50% extension. If you can't, typically if you can't extend and you get a rejection passed into, so you go past 50% back in, then that's it, right? The market can't really do much more, can't get to 100% of initial balance. So you have two rules, right? You have the rule where you can't even get to the 50 and it rejects, then you usually get neutral day, or you have the rule where it extends past 50%, but it can't even start making its way towards the 100%, right? So momentum is gone, and it comes back in, and typically that produces some sort of upthrust, and that's what we got, right? So it's, anyway, interesting rules that I've just noticed over years of using them, and other traders have pointed them out. So here's, I had it here. 100% extension is 44.89. Also, it lined up here with this volume pointed control from 324, right? So these are the kind of the things that I have on my chart, right? You got this Tpo, you've got this VPOC here. It's 100% of initial balance being this blue line here, where 100% is simply doubling it, right? So here to here, extends to here, right? And 50% of it would just be half of it, right? So here, so it extends out, right, and puts this on a chart. So you could see that there's like correlation. So had the market gone down here, the 100% extension of initial balance, which is the first 60 minutes of trade for the cash session, would have taken us right into this naked volume pointed control. You could see it's orange here, pushing out here, right? That blue line makes it a little bit hard to see. Right, but these are the things that intraday that I'm looking at as we're coming into levels here, that really help me stay away from, say, the chop zones between here and here or something, right? I like to take precision entries with nice defined risk after the market has demonstrated some strength, right, or weakness. So that's my style of trading. A lot of sitting on hands until it comes into my zones, and until I see the setup, occurring on lower time frames. Maybe I see some capitulation. Sometimes I'll enter on capitulation. I did that a bunch on Friday. I saw what was short-term capitulation. I kept entering, and then it would bounce way into profit, and I'd move my stop above break even, right? Because in those scenarios, you don't want to see the market returning to those lows, and yet it kept doing it. And so I was right in taking my stops, which were above break even, because it kept going lower. It kept demonstrating weakness. So it was not fitting my thesis for what I thought would be what should just be sort of just a spike low, where you get this spike, you get capitulation, and then a big reversal. So the big picture for me is we're in a bullish a market that's just made a big move and that's got a lot of momentum. So I'm looking to buy dips and looking for big moves to the upside. And I tried a bunch of times without losing until I finally got it towards the end of the day. So, sometimes it doesn't work out that way. Sometimes you get stopped completely. You're full stop, right? And if that happens where you're taking just above break even, but all your losers, you're getting full stops, well, you're going to have a losing day. And that's just how it goes, right? So I was lucky in that that didn't happen to me, but I accept the fact that it very well could have happened. And as you get better as a trader with your entries, and as you understand what it is that you're looking for, you may have more of those days where you're not going to have a losing day, even though you were quote unquote wrong, right? And Linda Raschke talks about this. Location allows you to sometimes get out at break even when it's not doing what it is that you think it should do at that area. And that quote that she says is from one of her interviews in the New Market Wizards. And I can identify so much with that quote because a lot of times I do get some of these really good locations. The difference between me and a lot of rookie or newer traders is that I take my stops. So if I have a 3-point stop, I don't move them down. I don't add to my position. And if I lose, I lose, and I accept it. Um, what a lot of newer traders do is they scale in, they move their stops down, and now their risk reward is super skewed, and that position could turn into a massive loser. I don't do that, right? And so that's how I'm able to sort of get away with over the long haul, having a pretty decent um, expectancy and risk reward ratio, um, and a high win rate. So but if you're going to trade that way, you have to be absolutely disciplined in your trading, and there's very little room for error. So I go from that to very small position sizing and looking for swings off of very important areas. I did take swings. Oh, you guys can't see, but I did take swings on the lows when we broke the head and shoulders on the daily, because most head and shoulders fake out at first, right? So that's a high probability setup, and I was looking for more on that. But by and large, most of the time, I'm in and out of positions anywhere between depends on the day and how much volatility there is, but anywhere between 3 and 8 minutes, and that time has been going up. The more actually, it's been going up since I've been off Discord. I've been more patient with trades and doing other things, and that's something I've been really focused on. So anyway, it's kind of correlating with that a little bit, but so that's interesting. So anyway, on the day, I'm going to look back at the chat here and maybe answer some questions if there are any. Let's see. Ever see that quote, losers average losers? Yes, goat. Yeah, it's a bad thing. You don't want to. I mean, if scaling in is part of your part of what you're doing it's part of your plan, your predefined plan, and you're not going bigger than you should, then that's fine. You can add to what is a market moving against you, and you're scaling in because you want to buy a zone, but don't go larger than what you've defined as your maximum size, and as your maximum loss, because that's where one big outsized loser will hurt you for the week or for the month, and that's where a lot of learn to lose graciously, right? And once you define your risk rules for what your maximum loss is, don't deviate from that, because what can happen is on the times you deviate, there is no guarantee that that's not going to be, you might do that multiple times, and then you start tilting, and then emotionally you just get off kilter, and then you do things that you shouldn't do. And in trading, that can mean death. That can mean the end of a profitable month or a year or your whole account, especially with futures where everything's highly leveraged, right? So the leverage in futures is incredible. So futures are not for everybody in terms of especially for people who break rules. If you're in futures, because we get all this margin with futures, we're controlling. Let's say on the E-mini, we're controlling contracts that are worth hundreds of thousands of dollars, and for 1 point moves, it's $50. And if you are able to control, a few $1,000,000 notionally with a $5,000 account, man, you can blow that thing up so freaking fast. Even a $20,000, you can blow that thing up so fast because you have so much leverage. Like, they give you the rope to hang yourself with, right? It's crazy. So if you don't have stop losses in, and you aren't following, let's say, maximum drawdown on per position of 1 or 2%, whatever it is for you based on your trading strategy, but 1% is good. If you're not following that, then you can absolutely get lit up on a single day for your whole account. So, in other words, if you're not disciplined trading futures, you should be doing something else. Don't play with futures at all. Even micros you can get into big trouble because people just don't understand the compounding and the leverage involved. So anyway, back to this daily chart here. So we have these singles here. So I'm going to go ahead and we've got these singles here. It's pertinent, right? So I'm going to see on my chart as we get close to this area, I'm going to know there's singles. I'm also going to know that there's this first HVN from the week, right? Or from this, essentially this day, based on the prior week's TPO. So I'm going to mark that up. So I'm going to do this. We're going to go here, and I'm just going to do this and click it and say it's singles from what? 3:30. Is it 3? Let's see. What day is it? 3:31. Yeah. All right, 3:31 singles. Extreme low volume node area, though. I'm keeping that in mind here because I think we are likely, even if we take a plunge, I think we're likely to come back into this area. Because we have people in profit above, we have people in profit below. I think balance will come with exploration of price in this area. I think I talked about that quite a bit already. All right, so let's get rid of this, erase this. I still like this. I will reevaluate as we get lower. Okay, so, all right. Enough of this TPO chart here. Let's move on to another screen. Where do we want to go? Let's go left. So this is a weekly chart of the E-mini with the commitments of traders down here and then just volume. And then I've got some major moving averages, the 20, the 100, and the 200 SMAs here, right? And so I have just major, what I think are, oops, I'm not even on the chart. I have here what are major zones, right? So this was the low. I think that this is something of note here. Pierre, Claude, there's no more Discord. It's gone. Poof. I don't have time for it. And, when something is in your name on Discord, there are always liabilities involved with that. So that's why I couldn't just hand it over to somebody else and say, here you go. I considered that before I shut it down because, there was so much posted there. And I thought, well, might be kind of cool to keep it around, right? All the Sierra chart channels and everything, but then my name's over the whole thing. Brown Dog, what's cracking? So it's just there's other things to consider with all of that, and it would always be something that I would have to come back to, and then it would suck me back in, and I don't want to be sucked back in. I've got a young family. I've got my own trading. I've got YouTube, which I rather enjoy greatly. I've got Twitter, which I enjoy a lot, and I've been posting a lot to Twitter. So, and all those things bring me directly some benefit, right? So the Discord was just, I paid for things there. It just cost me money and time, and so it just was not worth it for me. And I'm not going to make a business out of it because that's its own headache. So I get, even if there is some benefit, I get some tiny benefit out of YouTube and potentially Twitter and all of that. It's just, I don't know. the Discord, it can, yeah, I don't want to talk too much about it, but yeah, it's not around. So this on the weekly is an extreme LVN. So this is going to be relayed on to lower time frame charts. This is really interesting to me that there was just hardly any volume down here. Yeah, lucky. It was the best thing for me, definitely. But I understand that other people did not like the decision at all. And they felt like I did it rashly, but I had been considering it for months, giving people opportunity to step up more and sort of moderate it so that I didn't have to. And there were some people that did step up, but it wasn't enough, right? And a lot of these people were brand new, trying to prove themselves and stuff like that. And a lot of the people that had been there a year, they just lazy, just wouldn't do anything. So it's one of those things. I mean, I enjoy those people, but it's a lot. You guys don't. I mean, once it gets a little bit big, it is a lot of work. It is a lot of work. Props to anybody that runs a bigger-ish Discord, doesn't get paid for it, and just does all the maintenance. It's so much work. It's ridiculous. Oh, props to you if you're one of those people. So anyway, so down here with the COT, you see how the COVID lows, the asset managers, which are the very biggest group of net long buyers in the S&Ps. So down here at COVID lows, asset managers were underexposed. You see on this pullback, it's almost similar to the net exposure of the COVID lows. With the Fed raising rates, right, and talking about reducing balance sheets and everything, everybody sold. And then, Ukraine and everything, asset managers are woefully underexposed down here, right? And then with levered funds actually lowering exposure as we rallied, right? And someone said the other day on Twitter, they're taking profit. You got to realize this is a look back. So this is a look back of Tuesday from last week. So it's data up until Tuesday of last week. That's what this is down here, this COT. There's a look back. So there's a little bit of a lag with this data, and you have to account for that. So as this is falling, right, and the market's falling, right, so they're selling, and then you see that the levels are getting close down here, you need to start anticipating down here that they're going to probably put some exposure back on, right? And then you can look at other things to kind of figure this out. Now look at the COVID lows. Look. So dealers, right, or people who take the other side of the trade, they're always net short. Look what happened on COVID lows. Dealers started to get net long. Asset managers took a little bit long. Same stinking thing down here, like you can see. Dealers started to get longer down in here. It's interesting. Asset managers still selling. So the idea is that this big group, and dealers are a big group that take the other side. You can see they're roughly almost equal. You see that? How there's like negative or positive 500,000, and then down here negative 600,000 or whatever down here up here. Is that the asset managers, so as dealers start to buy and then asset managers start to chase a little bit, they may push up price, dealers will start getting short again, right? And so you can kind of see the interplay between how prices move sort of relative to dealers and asset managers. Other reportable, these are all like smaller traders. These are like these blue lines are like smaller hedge funds. Other reportable are typically like large, well, they're relative to the asset managers and levered funds, they're large traders that are considered small relative to these other big ones. So anyway, these guys, they can be pretty smart. Look, the other reportable. Look at that. All right, see how they got long here, and then whoop, as it rallied, they took off into this area. So I would say that these guys are much more nimble. These are here less nimble, right? They're really moving markets on much higher time frames. So this is interesting. We're back up after a humongous rally. I still think asset managers, this is lagged data, and I think this updates now on Sunday night. It's not just right at 3, because this data used to be, man, I just can't remember the name of the data provider. It's now they were bought out by NASDAQ, and after they were bought out by NASDAQ, instead of updating at 6 p.m. Eastern on Friday, they started updating, I think, Sunday night. So tonight at some point, I think this data gets updated, because this is still last week's data. So anyway, I'm curious to see when it does update tonight what a lot of these end up looking like, right? But I would expect this to start to move back to the upside. So I think there will still be some chasing here. There was an interesting chart that Sentiment Trader put out on Twitter that shows that the major hedge funds are net long a lot. Every single index, Russell, Dow Jones, NASDAQ, and S&P's futures in record numbers. Now, you're like, whoa, then who's left to buy, right? When you look at the levels that they've been net long like this, the markets have always rallied afterward for the long haul. Okay, so that may be strong hands, we don't know, but if you look forward at when they have been this exposed to the long side, it's always, well, almost all the time it's a good signal. So it is interesting, right? We get all these data points, and people running all of these data points because we live in just a super data-driven world where people are posting stuff to Twitter, and that has effects on which hands enter the market, and thus whether they're the weak hands or the strong hands. So it's really interesting as we have more and more of these data points shared publicly. That has an effect on the market. And in terms of game theory, that's interesting to consider. So sometimes it's clear to me, other times it's not. This is not one of those super clear times. I am long, but I'm going to stay super nimble. I have a frame picture that says Wall Street panics as stocks crash, billions lost. Wave of selling engulfs the financial market. October 24th, 1929. It's a front page news clipping, and I have that hanging to the left right above one of my monitors, because anything can happen, right? Risk happens fast, and so we're in a 100-year bull market, but stuff can go down the tubes quickly. So you can't just YOLO, even though we do only live once. And it's been a long bull market. So yeah, it's an interesting point in the market here. But these are things that I'm kind of looking at on this chart. And get rid of this stuff here. Oops. Use my delete button here. Okay. So this is an extreme LVN, right? No, hardly any. We retested right above it and then sprung out of it. We retested above it. This could be on the weekly still a lower high, and we channeled down. So, big picture, big picture. We'll see. One thing that I read on Twitter, and I've read for a long time, not just that I read it recently within the past week or two on Twitter, is that, when the economy is growing, when the yield curve is not inverted, despite the Fed raising interest rates, and when earnings are improving, it's always been 100% of the time, a good time to continue to invest in the markets. And that's the situation we're in right now. Um, and so that's more of a fundamental perspective, but it's something that can help us to have a broad picture on the markets in just a slightly bullish bias. I mean, you trade the charts, you trade the market that's in front of you, right? Price is ultimately king, but it is good to consider that we have an economy that is still growing, that our unemployment record our levels are low. um, One of the things I look at are the master yield Bank of America uh, master yield to Bank of America credit spreads. It's one of the things I look at in Thinkorswim. And when spreads are very tight, it means that banks are not pricing in a lot of risk. Um, and that's usually a really good indicator of money is flowing well in the sort of behind the scenes and stuff. So, and that spread has been tightening, right? It kind of had rallied a little bit, and so suggesting some risk as the market fell, but it's been tightening now again. So, I mean, there's always mean reversion, right? When it gets too tight, then usually any type of risk off event will sort of trigger those markets again, and things have been going too good for too long, and people get a little scared, and then they price in some risk, and that's just the way the world operates, right? Things are going too smoothly for too long, or same with markets, right? Where you get not very much volatility for a long time going on, and the markets just sort of rally and rally and rally. People get a little nervous, right? Mean reversion, right? Some markets, they correct, they pull back, right? And so I kind of, when I look at credit spreads, I think about those things. And right now, credit spreads are tightening, and they need to go sideways potentially for a while before they explode again. It's kind of like VIX, right? Where you get spikes, and then it makes lower highs, and it comes back down, volatility recedes, goes sideways for a while, and then boom, you get a big event, and then everyone gets fearful, and everything spikes, and people sell. And when they sell, people typically, when they sell everything quickly when they're fearful, right? Which is why during selling you get much bigger volume spikes than you do during buying typically, unless it's a FOMO, sort of a major top where you get like a parabolic move, right? And everybody goes bonkers, and price goes parabolic, and smarter traders recognize that, and they sell into that strength on volume, and that typically will mark a top too. But so anyway, that's sort of how I think about some of these things here. Let's see. I'm going to go back to the comments. David Trades says, how do you get the COT study on there? So David, just Google Sierra chart and commitments of traders, and there is there are a few threads that will come up in your search on the support board. They all point back to sort of the master thread at some point. And there is the code for it there, and you have to compile it into a DLL. So then all you got to do is you take that code and you compile it. So for the compiling that study, just again Google a Sierra chart, how to compile a study, and they'll walk you through it step by step somewhere in the documentation on Sierra chart, and then read that thread because you're going to need an API key to get that COT data. And now you get it from NASDAQ data or something. The old data provider, I just can't remember what they were called. But if you Google them, and you go to their website, it'll automatically forward you to the new NASDAQ data, and it doesn't cost anything to get that API key, or it didn't um, when they were the old data provider. I don't remember what it was. Quandl, yeah, Quandl. Um, so Quandl will point you to NASDAQ, and then you gotta, you just gotta get your own API key for that, and so it's a little bit of work. It is. It's not um, super easy, but in the process, you'll learn a bunch of things about compiling, and then you'll be, it'll be a whole thing. And then if you get to the point where you're like, well, if you get to that point, you're probably reading well, and you'll figure out what to put into your study as far as API and everything. I would show you the study settings, but again, I'm going to display my API key and everything, which you guys can then take and use, so I'm not going to do that. So, but I would be, if you come back to me and ask me on Twitter, like, hey, how do you set up some of these like the asset managers, other reportable leverage funds, and which ones are they? Because you have to do a little bit of work to figure that out. I'm happy to provide you screenshots of the setting, but I can't do it live because, again, the whole API thing, one of you is just gonna take my API key. So anyway, so that's how I use the COT. So these levels are all on my daily charts and then on my lower time frame charts. So let's switch over to a daily chart, hourly chart, and 5-minute chart for the E-mini. Let's do that. All right. So that's what I'm going to do here. Upper 49, left side. There you go. All right. So you guys should be able to see this okay. Let's see. Yep. Okay. Just making sure. Again, I'm on Linux and I'm used to Windows with OBS, and so I'm just taking it easy, making sure I have got this done correctly. All right. So here's the daily chart. Here's the 30-minute chart. I keep calling it an hourly chart. I switched to 30 minutes a while back, but for over a year this was an hourly chart. I like the 30-minute because this gap study is more accurate on the 30-minute based on how I have some of the things set up in the chart, new bars, and etc. So anyway, I just know the 30 minutes better. So let's go to the daily. Let's make it bigger. We're not going to cover NASDAQ today, so shoop to the bottom and to the bottom. All right. So this is RSI. I believe it's 14-period RSI. Let's see. $14. Yep. When the market went sideways here and the RSI at this level was below this level, so what you ended up having was, so for you RSI lovers, you're going to find this probably, you're going to chuckle, you know exactly what I'm talking about. So here's RSI here, right? So we can say it's, from the close, right? And so RSI was slant, the highs here were lower than the highs here, and here's RSI here, right? So we line it up, and the highs here were lower. Oh, well, no, that's wrong. Sorry. It's like, I'm going to make myself look stupid. It doesn't take much. Okay. So right. There you go. So this daily bar was far below here, although here the RSI was equal levels. That's a little bit of a momentum divergence, right? Where we have unequal momentum and it's relative because of this low, but we have unequal momentum from here to here. So you would typically call this divergence. That's a bearish divergence. So in the direction of the trend, and you would want to sell it. So the next day you got that big sell bar, right? Or you got a sell bar, everybody and their mama went and got short. But then we came out with that news that all these hedge funds were like some record stupidly short, and then we just rallied straight up. So it's pretty funny. Pretty funny how that works. Anyway, these RSI divergences don't work that well in there. I'll show you here. So you see this here, up here, RSI high, and then this one makes a much lower high. So when they're kind of big areas, so I say tongue-in-cheek. Okay, so it works well when the RSI is not point to point, like kind of like this. So if this had rounded out like that and it was still making a high or a lower high here, then you could say continuation. But like just 1 or 2 points, it doesn't work very well. So you can get really chopped up here. But anyway, you could see here that there was a humongous divergence here on the RSI. Right, you see that? Like that, right? So kind of interesting. So when I say it doesn't work well, what I mean to say is it doesn't work well on very local point-to-points. So I wouldn't use it like that, but so that was kind of interesting. Anyway, enough about RSI. So we looked at the daily TPOs, and right, we saw that there was some correlation for support at 4509, right? Also had it here on the daily chart, right, which is just a little short-term balance area where we broke out of, right? So just general support, and there's a little volume node there, and then nice little structure, right? So another reason to put lines on your lower time frame charts from your higher time frame. I've identified this as well. This is a swing high, right? What does this look like? So this is low volume node. So you expect maybe price to fill some of this in, maybe fill some of this in. But where were shorts wrong? Right in this area. We tested it and still went. Tested back here and still went up. So if we come back to this area, what do you think shorts want to do? They're probably going to want to cover. So markets may come back into the zone, maybe find stops or something, right? All the people that put their, maybe Adam Mancini is saying, according to my trend line, 43.81 is a level, right? And he says it like that, although maybe Mancini followers know, oh, well, it's a zone. But a lot of people are going to look at this and they're going to have their stops just below. So maybe they'll run it, stop out all those Mancini followers that are like to the tick people. And then whoosh, we see a bunch of capitulation here and then rips back up. That might be an interesting place. So, right, he has a lot of followers and a lot of people who worship at his feet, which is great because you get to see people who will buy ES futures just based on his level, and sometimes they'll buy a little higher than his level, and sometimes they'll all stop out at a certain level. You see this massive capitulation as everyone then goes short. Oh, Mancini's level is lost, and then they buy it back up through that zone, and that's typically when you know, right? They just screwed a bunch of very short-term weak players in the market, right? See how I like to fade the crowds? I like to, or at least use the knowledge of certain people. Mancini's not the only one I follow for that, but I do like to consider that. So that I think that could be potentially useful. So anyway, so here's the daily, right? So we had all these. trend lines that everybody and their mama had on. So it was either this one, or like, the last one would have been like this, right? Where folks were like, hey, now everything's looking good. Let's see if we make this white. In Sierra chart, you got to make sure you do something like this. Don't go outside of time, then extend it. Extend drawing. Okay, now you're good. So now it's tied to this point in time and this point in time. You don't want to tie it over here on the right fill space because it'll really mess up. Won't look right. So as I talked about on the weekly TPO chart, where I showed the expanded view and then the consolidation, how we broke down out of it. See how this is similar? We have this pullback, bounce. Oh, people get long. A little consolidation, and then what? We have the bar that sells all the way through the bottom. We retest. So this is like BBWC, which is why it's not here anymore, but I had this marked up exactly. So here's the lows of this candle here, the highs here, the lows here. I had this marked up like this as resistance because of that idea right there. See how it immediately colors over here to the 30-minute chart? So you see that as resistance, which is why I sold. When the markets came up here, I sold all my Google, looking to buy it back with the markets potentially falling. You can see on this 30-minute chart, very, very sharp move in the market, right? So this is an RTH only 30-minute chart that again, it doesn't show overnight price action, so I'll put trend lines on this, and typically when these break, you get moves to the downside, right? So here's my daily time frame support. You see how it's short-term support here? This is an extreme LVN on the weekly, right? We already covered it. On the daily, right? So on my low time frame charts, this 30-minute chart is not going to show the weekly one, but if I did, here's what it would do. Okay, let's see. That's number 34. Let's go into the chart settings real quick. I'll add it so you guys can see. Oh, it brought up the chart settings way over here. Here we go. So chart drawings, and we'll say instead of 17, which is this is 17, we're going to say 17 and 34. Chart 34. And I'll apply it. See this? Ha! Look. Right? So you see how now this has, you can see on the lower time frames, see what I call this? Base breakout with consolidation. You see how on this low time frame chart you can clearly see for the regular trading hours, this is a highly consolidative zone where we whoosh broke down really hard out of this zone. So I call it resistance. So Kylie Porter, I believe a bunch of people don't like it, but I actually think they're okay. And the reason I think they're okay, I mean, they're different, but the reason I think they're okay is because this top section here, although I think it's really dumb that the only way you know that you're on this tab is a little asterisk. It needs to be a colorized thing, right? In my case, I would like to be able to edit it in the global settings to be orange, right? Kind of like this. Like this is an active screen, so this is orange. This is an active screen, so it's orange, right? I'm in this chart book, so it's orange, right? I'm selecting this chart book, it's orange, right? This lights up, right? I want to be able to customize things like that visually because I'm kind of a visual, kind of a visual person, right? So I would like this to be, but I think that the separation of these things actually makes sense because they used to have just like main, advanced 1, advanced 2. Like what the heck is advanced? How do you tie something like as far as a memory tree to advanced 1 and advanced 2, right? Alerts tab made sense, but this you can actually tie specific things as long as they put things under the right heading. If they start putting things under the wrong headings that don't make sense, which so far it's been pretty good, right? Because you can say like chart drawings, show chart drawings for different symbols, show hidden drawings, that's related. Allow modification of chart drawings from other charts, right? These are Adjust tool values to tick size. Yep. Chart drawings. Draw advanced custom. Yep. Draw non. Yep. Draw highlight drawing. Yep. This all makes sense for it to be here, right? Market depth stuff. Maximum. It makes sense. The DOM, right? Even for trading, right? For scales, right? For linking. Look, I can link all these. This all makes sense. So it'll be easier for new users to memorize this as opposed to the old. But for old users who are used to the old, I get it. And some of these fields like this, right, where you have one click on the field, it's now another click to change, to alternate it, right, from yes to no, right? Some people are just used to, I don't know, coming in here and like this, and just being able to click on it and highlight it. The action of clicking and highlighting, it's not very good. I suspect they'll improve a lot of this as they navigate their own charts and go, oh yeah, we didn't do this as efficiently as we could. People are going to waste a lot of time with this. But in terms of organization, it's good. Again, they need to have colorization that's controlled in global graphic settings, right? Instead of just this asterisk, which is, I barely even noticed it. I noticed it in one of my prior live feeds. But yeah, this is not good. They need to just update it a little bit and give you control over the tabs here. That would be a huge improvement for what they have now, and then things will make more sense. Because you can already, you see how I can control this color as far as the blue highlighting and stuff. I can control the backgrounds. I can control these headers. This light gray, that's a control for me, right? I want it all to look nice and dark theme and pretty, right? That's important to me. Very visually oriented, but for me, I think they're very good. And Sierra Chart talks about the fact that they, performance-wise, they're much better, and that they don't use the traditional windows. So I like these, right? They just need to be able to, again, do those things I suggested. So yeah. My reasons for why I think it makes sense. But anyway, so you can kind of see here on when I added all the weekly stuff that you can see that a lot of this correlates on low time frames, right? Can you see it? Sure you can. Now you're seeing the nitty gritty here and why it's sort of important, right? So like these orange lines, these are all gaps, automatic gaps in the market. They don't just automatically translate into other charts. They don't just display. So to me, not all gaps are really that important. Like this one is, it's the close is here and the open is, oh gosh, somewhere up here, right? Up in this area. I have to maybe zoom in on it a little bit. Here, well, let's zoom in on it a little bit. All right. Right here. There's the open. So that's, let's see. Let me see. No, it's not. What am I thinking? Oh, forget it. I'm just not going to mess with it. All right. So anyway, when the gaps are relevant, like so here, this is a gap down here from here to here. I think it's relevant, so I'll put something in. So I want that ability to be able to do that. Brown Dog says, hey, there's a website that you talked about on Discord where we could sign up for different tiers. I forgot what it was. Different tiers of what for what? Different tiers? Maybe you can clarify what you mean by different tiers. Huh. Yeah, I don't know. Anyway, I'm going to go ahead and So I've already got major support areas in here, right? This has already been support. Potentially, support could happen here at the LVN here as well, right? Above the high. Different tiers of access to what, though? Brown dog. To Discord? I mean, I'm not on Discord anymore, but I'm not sure what you're referring to. I'm racking my brain for what I may have said about different tiers, but I just can't. Lucky, Reno, have a good one, buddy. To studies on Sierra chart, there's different tiers of access. Yeah, Discord is totally closed down. It doesn't exist anymore. So maybe for Ticino Trader, he has like level 1, 2, and 3 chart books. Level 1 gets you a bunch of, yeah, I think that's what it is. Maybe. But with Sierra chart, you have the advanced package, and then you have like the standard package. So that's all there is, and I don't really remember what they call the different packages. So you have to look. Oh, maybe. So zip on the Sierra chart support board is Akin indicators. Oh, I didn't know that. Tiers 1, 2, 3 also there. Okay, there you go. So zip is Akin indicators. He's done like thousands of indicators, custom indicators for Sierra chart that used to be free once upon a time, and now he's charging for them, and they're great. I've used them for a lot of different things. So, yeah, his God, what is his? His forum link. I can get it for you. Hold on. Let's see what screen am I on. I'll get you a link, buddy. Because to be honest, his link for some people, it doesn't look very inviting. It's in Czech. The name is weird. It's like forum.obchodny indicatory.cz, right, for Czech Republic. So people see that and they're like, what? So there, I'll get you that right now. But it's legit. He's not a hacker. He's not going to steal your information. Very good man, by the way. Highly recommend his custom studies. Here you go. Here's the link. Okay. Good job, Reno. Although, I would have to say his is probably more efficiently done because he'll put it in one study. So less studies you run, the more efficient it is. But yeah, great job, man. Some of the stuff can be done through like standard studies, but boy, you got to point them to, like, you have to have reference. It gets complicated. But yeah, you should be proud of yourself, man. Like, I'll show you guys in a little bit, right? There's something that's a little kind of crazy on my, what was it, my major screen that I showed right at the beginning of this live stream. Let's see. So James Ferreira asks if I'm running Windows 11. I am running Linux, which is how I'm able to control this kind of thing. Let's make sure how I'm able to control this kind of thing, right? Where this is dark, or I can make whatever. You can see the little wine bottle here. I'm running wine. So I'm running Sierra Chart in Linux, and it's about 60% more efficient in Linux. But my operating system is Linux. I have a dual boot, where I use Windows 10 and then Linux. But yeah, I do everything in Sierra Chart in Linux. It is more efficient. But Sierra Chart is not optimized for Linux, so they will tell you they're not going to provide support. So if you have issues, then you're not going to get any support. So disclaimer on that, which is why I won't show people how to set up Linux. Number one, I'm a Linux newbie, but number two, it's more involved. It just is. It's just more involved than Windows, and that's part of the power and why I love Linux is because I put on the system what I want to put on, and so the whole operating system is in C++, and it's super fast. It is just lightning fast everywhere, and it uses a ton less. Like I'm at 2% CPU right now, processor, and then my memory is at like 4%. Whereas when I was on Windows, CPU was at 8% minimum, and then memory was upwards of usually 8 to 12%, right? And then I would run sub instances of Sierra Chart so that my DOMs wouldn't have issues. But in Linux, all my DOMs, all my charts, all my 800 studies plus in all these charts are all in one chart book running flawlessly, right? Using that reduced amount of, computer processor and memory. So I don't know how that magic works. It doesn't make sense to me why there would be such a difference, but there just is. And so I'm very happy to do this and to have complete dark themes that run through the system for everything. Or like Windows, you can't get your task manager without doing a whole bunch of custom mods to be dark theme. And even then it doesn't work properly. So it'll break, and then you have to go into your command line with Windows and modify some stuff, and then sometimes Windows will override it with an update, and then everything breaks. It's just a mess. Whereas like right now you can see this is all dark themed, right? So like I'm showing the chart titles, whereas in Windows you can't get this like this. So like show title bar, right? And don't show title bar. Look at how clean that is, right? But notice what I do is I don't have the E-mini symbol here inside the chart. I have it in the title bar, right? So it just saves me some space according to my workflow, because I like to have all the study values up here. So I don't want to have the symbol here. I want a separate line. And I like how this looks. And I like the fact that when I click it, it's going to light up orange. It's going to light this up orange. And it's going to light up the chart book orange. Now, the chart book I only use one, and I just cram all my charts in. But like here, this chart is saying it's this one, right? You see that there's like, I get to have color consistency, right? I get to pick because I'm on Linux, right? And so, it's just, for me, it's a whole thing. But anyway, I need to turn this chart title back on. See? Boom, right? And I can make this all black if I want, but when it's selected, I just want it to be orange. It's kind of a theme. It's a whole thing in my my chart books, right? And then like little things like, you see how this menu lights up blue like this? Where I'm selecting it, and then if you go into the Sierra Chart menu itself, notice how this value is lighting up the same color blue. That's because I'm controlling that blue color in global graphics settings. Then I'm also controlling the blue color in the Linux operating system through Wine, through the configuration of the Wine application, which controls my Windows software. And so I can get the exact same color hues and everything. And so everything just looks consistent. It looks modern. It looks nice to me. So anyway, that's part of why I do it in Linux, but the performance is vastly increased for me. So yeah, it's but again, I have a feeling if I did a video on how to do it, yeah, people would just be like, that's over the top. It'd take hours. I mean, it's just not for everybody. God, I wish I could say it is for everybody, but installing an operating system, dual boot operating system, installing Wine, Sierra Chart, how to use it, it's just all the configurations in Wine itself. It's just a lot. So yeah, not going to show. James, there's a person in Deviant that has the fix for the task manager. I know. I use it on Windows 10 and it still breaks. Oh, Jack, I am using Linux Mint 20.3. So my Sierra Chart, when I do run it on I'm on Windows 10, it looks like Ubuntu, right? So it looks pretty slick too. But yeah, I've been spending all my time in Linux, and it's just better. It's faster. I mean, I run Thinkorswim. They have it's they have instructions for downloading for Linux, but then they turn around and say like we're not doing updates and all that jazz for Linux, so you're kind of on your own. But it works flawlessly in Linux as well. With it's a little bit of a power hog, CPU hog, but yeah, it still works fine, and so does IBKR. They've got a Linux download, so it's good. And then I still have everything else, Telegram and Chrome, and all of that works perfectly, and it just works better. Everything on Linux works better. It's just lighter, and I have less problems with stability. Well, I don't have any instability issues in Linux, whereas in Windows, I mean, unfortunately, I can be in the settings in Windows, and if I'm in settings for, I don't know, advanced mouse settings for too long or something, I come back and it's frozen. It's just stupid stuff. So you get sick of that in Windows, and then all the garbage that they're constantly telling you. Oh, connect to whatever, the cloud, or connect to your Microsoft account. It's just nonstop. So I don't get any of that garbage in Linux. So it's just, I don't know. I'm liking the freedom from the big evil Microsoft. So it's been good. So anyway, here, I don't know. I'm actually a little burned out from talking, and I want to just sort of finish all my charting in peace. But let's see. All of this stuff will get basically copied over to other windows. So I'm going to go ahead and show you guys the other windows. Which, let's see. Is this not showing what it's supposed to show? Oh, it's not. All right, let's do this. There we go. The one window I didn't set up correctly here on my system. Oops. There we go. Get it centered. My wife's mom is here. I hear my kid. Now you can play with me, Grandma? Because she must have put down our 2-month-old, 2.5-month-old. I have a 4-year-old boy. Anyway, so all this will get, shared onto all of this stuff here on, you can see, right? You'll see. Right? You see these lines from all these other charts? And I'll know just by looking at these other things that these are going to become levels, right? See that? How they're all marked up and stuff. right? So this is what, a support zone from the weekly that we identified. So the more you mark up what it was that you determined was important for whatever reason, right? The more clear you put that, right? You're going to see here VPOC 2 weeks, right? So we're right there, right? Right? You see all this? So as we come into this, should have been red, white, and blue, but no. As we come into the red, white, and blue from the top, right? I'm American, so I see American colors, which obviously French colors too, but whatever. If Reno's still here, he'll give me the middle finger. You can also see that at this level, the 4570, you see this extending out here, this little red shaded thing. That is bid-ask volume imbalance. So this is greater, 1,000 or greater bid volume. So volume that hits the bid. So negative 1,000 delta, right, or greater, or absorption on the bid that has not been touched yet. See how it lines up with this level? Now I know everybody's marking this down. Oh boy, 4570 is now really important. But you know what's going to be more important? Is how do we get here? And that's what's going to help me determine if I want to even take a position around here. But you notice now all these other things are lining up. So that's what charting weekly, daily, your TPOs, looking at levels, looking at them carefully on different charts. This is how it can help you when you have, let's say, your footprint chart that you're trying to execute and scalp off of. You're now looking for, well, what does volume do when it comes here? Does price slow down when it comes here? Does volume taper off? Is there a big passive seller here? Right? Did the market consolidate right under this zone and then it breaks out and doesn't go anywhere and it reverses, comes right back in? Right? So maybe you're the kind of guy that you only look at short-term traded patterns, right? The market's come up, it's come back down, comes back up, it comes back down, and then you see here, right? And then like maybe you're an Elliott wave guy too, right? Where you're like 1, 3, 5, and you're like, hey, wave 1 impulse, wave 3 impulse, wave 5, right? 2 is a pullback, retracement. 4 is a pullback, right? So these are normal pullbacks in Elliott waves. So you're like 3 waves up, and then you don't have any of this on your chart, right? But you see something where you see that this is a third wave, and you're thinking to yourself, well, this impulse, because it's wave 5, let's say you're a classically trained Elliott wave chartist, and you're like, wave 5 always has to be the longest. It's the parabolic one. And so you're like, you've measured 1 is short, 3 is a little longer, and then 5 is, you're like, it's got to go way up here. And so you get long here, right? You get long, let's say, at this breakout right here, right? New highs. And you're expecting a big move. And then all of a sudden, there's a big seller that comes in here. If you don't have any of this on your chart, right? Big picture stuff, you're going to go long here. And maybe your stop is, I don't know, maybe there's a volume node or something here, and your stop's here. So let's say you're getting long. Let's see, your volume node's here. You're getting long above this high, and you're targeting, I don't know, 1.2 Rs or something, right? You're like, all right, I'm going for the 5th wave, but the 5th wave's got to be long, right? Okay, I think that's a pretty crappy way to view the market personally, but there are people who do that. Okay, so or maybe it's just like, break of the highs. This is how I trade, new highs, breakout, I buy. Okay, your stop's below this node. Let's tighten it up for the sake of better risk reward, and let's just say the node is higher or something. Let's say it's right here. So now your risk reward is 1.5, right, R's. But you're not looking at any of all this other stuff here, and then all of a sudden the market rolls over. Knowing about this, that you're up against a higher time frame resistance, can save your bacon from entering on a fifth wave on a low time frame, right? So you see how you would want to consider where you are in the bigger picture. Now, if all this happened way below and we're nowhere near this, right, and you're looking for a wave 5 to really extend up, yeah, well then here's the start of higher time frame resistance. Maybe it makes sense to target below it, right? And your risk reward is good. So location, location, location. Having this stuff on your charts can keep you out of being a top buyer at the end of moves. And I don't like those kind of locations personally, because over the long haul they don't pay as well for me. So anyway, there you go. Let's see if I can delete a whole bunch of things here. Bink, 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 bink. Nope. There we go. I gotta click on the number. Oh, there we go. There we go. All right. We'll go back here. All right. So anyway, it's interesting how this big delta imbalance perfectly aligns with this area here. Isn't that interesting? I think it's fascinating. Look, there's none of them above here. Look. Look, there's nothing. Look, this, and look at this opening VWAP 30 seconds. It was resistance right into the close. Right, this is painted from the open, the first 30 seconds. This green, or this orange line, thick one, is settlement. You see how that is resistance, right? See how we came down, ice, I went long here, I sold into here. It's a settlement play. Why? Because volume is concentrated in a few ticks around settlement with massive absorption in here, right? And you can see that here for the day, big absorption, but you can see it also here. And it's concentrated around a few ticks. So when there's a high concentration of buyer and seller and we pull away from it and then you get a passive buyer, typically you bounce back to it. So it's a settlement play. And I've mentioned this on Twitter. There's lots of nice little settlement plays that can occur. They don't occur every single day. So I took along from here. Once I saw this ice, negative 2,000 contracts, 100%. That's significant. 2,000 contracts at this level with, again, the key being concentrated volume around settlement. Not volume way up here and volume way down here at settlement, but no, concentrated volume. You can see it. This is 1,000 volume bar. So settlement, I have it painted as the last 30 seconds as an orange background. So this is a 30-second orange background. So it tells me when settlement is starting to be calculated, which is this orange line starts here. So it comes up, opening VWAP, rejection, comes down. So some movement, and then back up. Okay? Then we break down. You see this? Big imbalance. Even from earlier in the session, look. See that? Big imbalances. They bought again. So I played the move entering here, back to settlement. I didn't go all the way up to here. I didn't short. I just played this one move from here to here. So I get in, stop below, take profit here. So stop was just below these lows. It was essentially more than a 2-hour trade in terms of risk. Why? Because the thesis is that big iceberg does not get ran. If it does, and I stop out, oh well, it's very little risk in terms of movement. And if it reclaims it, I'll get back in for a target of settlement, which is the settlement was a lot of volume. Now going back to what I talked about at the very beginning of the video, how much volume was this settlement? It was a lot of volume here, right? And that I look at sort of my my market internals dashboard, which I showed at the very beginning of this video and discussed at length, in depth. I know that the settlement around 30 is big, and then I know in real time, because I'm calculating settlement volume in real time, and it comes up on that dashboard of mine. So I know that this is a concentrated settlement, and it's a high volume settlement relative to prior settlements. So let me make sure you guys can see this. So when it came down here and there was ice, my play was tight stop, sell below settlement. I got the 3 points. I was never stopped, so it was a great trade. All right. But I could have taken this trade, with a failure and then a regain of this area. I could have taken this trade a second time and still net after both trades been up, right? Because we can put a risk reward calculator on this thing. Let's make sure it's a long risk reward calculator. Right? Stop below the lows. Entry was here. Target was 3 points. 34, 34.70. Oh, a little too much here. Oh, the baby is crying in the other room. It was like here. That's it. So 2.25 Rs. And that's how the trade panned out. I know I had a 3 points of profit. Let's see. Entry 35. Oh, no, it was higher. 35, 38, 75. Right there. So there you go. It was a 3R trade. So I could have taken this twice and still been up 1R. So you see how that worked out? So had price stopped me out, I still would have taken the trade if it came back up. So these are the kind of trades I love, right? And this is all just based on what I've seen transpire around settlement, right? You also know, because this is a volume bar, right? So these bars, it's 1,000 volume prints a new bar. So you know, based on how the length of these bars, how much, because this is a 30-second window being printed here, and if there's a lot of move or a lot of distance between the open and the close, you visually know it's high volume as well. Why? Because each bar is 1,000 volume, and so the more 1,000 volume bars you can squeeze in here, the wider this will be, right? So I know visually, just looking at it, when it's this wide on my screen, oh boy, that's a lot of volume. So there is a reason for that. But I also want to know when I'm in the settlement period, right? Then I want to know when there's big orders coming off or whatever, right? So, and this chart tends to be nice and clean for, as you can see, levels and structure, right? Pullbacks, right? Things get very clean. 1, 3, 5. Hey, by the way, perfect if you're like a short-term Elliott Wavis, right? 1, 3, 5, and after the 5 you get your pullback. What is that? Maybe 618. So this happens all the time. But again, more complexity to your trading. Check it out. Look. Hey, how did I know it was 618? You can just visually see. Look. See that? 618. Boom. Bounce into the close. Let's back up from this. All right. You also, at these lows, this is BBWC as well. All right. So if you guys were around early in this broadcast, you knew that this is all consolidation, and that usually, if you have a consolidation like this that breaks out, retests, then goes, when it comes back to this area the first time, see that? This is support. That the players that were wrong will, oops, wrong one. Right here, see that? The players that were wrong will try to get out. So this was tricky in that, all right, you had this bear flag, it broke down, and most people would do a measured move and say like the measured move is down in here, right? And then here's consolidation and whoosh. But so this held here, which is sort of this pivot-ish kind of area where, you know, resistance, breakthrough, resistance becomes support, boom, off to the races, 3 impulses up, or 1, 3, 5, and then the big, 50 to 618 retracement, golden zone to buy, and then this occurs right into the close, like right before. The timing wasn't optimal because I usually like to see this my time about 11:30 a.m. Pacific Standard Time, so 2:30. I like to have like an hour, hour and a half for the rally into the close on this kind of move. So this occurred right, not too far away from the close, right? 15 minutes away from the close. So that was a little surprising. I didn't like the timing of this rally. But you can see here that it's not surprising that out of this sort of consolidative zone, this is where the market bounces. But what I was saying is that this is tricky. You get the initial divergence here, right? Where this comes down, right? Some buying, okay. Makes a low here, right? So some really interesting price action up and down, and then boom, it pops up, right? Doubles balance here, and then it rejects. I was more interested in getting short here, to be honest. And then we consolidated, and then exploded, and that's why I was like, ooh, this could turn into easily 50 points. But so this was tricky in that it happened the last 12, 13 minutes right into the close. But so I wish things weren't this tricky all the time, but unfortunately sometimes they just are. So anyway, you learn a little bit more why I have these indicators the way I do, right? Settlement, opening VWAP, right? Here's that huge volume T+2, right? This T+2 has got massive volume, right? And how do I know that? It's because I keep it on my other sort of dashboard here. I'll find that one here. Lower 49 and quote board. Okay, there you go. So it's this. Oh, sorry. So it's this right here, right? So I keep track of these settlement volumes, and then I have these relative volume bars. You're like, how do you make this? That's like a 4-hour long video, and I'm not going to do it. I'll never do it because it's just too long. I'll put half of you to sleep. But I'll show you the different studies. Maybe you guys can figure it out just by me showing it to you here. Studies. Okay. So here's for settlement. This is horizontal lines is for this background here. Clock for this. Round study subgraph to tick is for settlement, rounding to tick. Symbol NYSE NQ NASDAQ. So this is the advanced decline, ADD. You hide it, and then you do text display for study for this type of thing, NYSE, right? So a lot of these are hidden. And then this one's for the NASDAQ, right? The blue line. This one is symbol the tick. That's for these in the background. So you have to set those to display under chart, and then these have to be not set that way to display over the top. Text display for study. And then you get a bunch of alert conditions. And this is for the display here, so that this lights up. And these alert conditions refer to hidden charts. Or do they? Maybe they don't. Let's take a look. Can't even remember. Nope, it's just based on the hidden symbol here, the tick. Well, this one is actually not hidden, but it refers to this symbol in this chart, so it's based on, right? And so you do all of that. So I'm going to go through it in like super fast mode. Text display for study from chart. So you use that. You guys can pause and rewind this. And then all these texts for displays for study to get all this information up here. And then this is for, let's see, Can you guys see how complicated this is? There's like 3 studies sometimes to make one of these. There's no better way to do it. Well, maybe there is a better way, but I don't think there is. I spent so much time on this. So anyway, how many studies do you have? And then you have all of the text display for study to get these backgrounds. Alert conditions. See how many studies? Just to make this chart. See that? What do I have? Over 100 studies here? There you go. I have 100 studies in here to make all of this with all of these relative bars, these bar meters, right? Just because I'm a visual guy. And all this runs very nicely in Sierra Chart. It doesn't lag or... But again, I don't... I'm really careful not to do any circular chart references and all of that other good stuff. RG says, what are the 2 blue lines? 2 blue lines. I don't know. You're probably asking me a question about something that's already off the screen. Your comments aren't time stamped, so I don't know when you asked the question unless I'm looking at the chat. Got a lot of screens in front of me. So anyway, right? That's just to make all of this is in the volume chart. The 2 blue lines. So one of the lines is opening VWAP 32nd. It's teal, and then the blue line that's like a background kind of darkish blue. That's also like a ask volume imbalance of, I want to say it's like 800 or greater, or 900 or greater, something like that. So you got to remember that's an ES chart that's showing you 1,000 volume bars. So if you have 1,000 volume bar, since the volume at price alert version 2 study, that's a study name, volume at price version 2 study in Sierra Chart is per bar, then that's a bar that has at that tick at least 900 out of 1,000 contracts that are imbalanced to the bid or the ask side, and then it prints that imbalance and stretches it out over the whole chart. So that's what that is. It's a bid or an ask imbalance study using the price, whatever I called it, the volume at price version, whatever, 2.0 alert study, whatever that study's called. But so that's what that is, probably, is what you're referring to. So I like to see those imbalances where you have a big imbalance. So if I had a if I had a 10,000 volume chart going, then those would be printing all over the place, right? Because each bar would only print after 10,000 volume, and so you would most likely see all those imbalances all over. So, and there could be some utility to that based on your trading, but I do 1,000 volume bars because I like to, after 1,000 contracts, I like to see how price moves, right? It's it's a little bit more low time frame. It's a little bit more, you know, I could see the ups and the downs and the rotations for me a little bit better. But I know some people who do tick charts, which are tick charts, or trade charts. It's trade based, not volume based, right? And the difference is, if you place an order for 10 on the tick chart, it's going to view your order for 10 as one tick, right? Whereas on a volume chart, it's going to say 10 plus whatever else, 10 plus the next amount of contracts, right? So, and I'm more interested in the volume. Why? Because if you notice, a lot of times, a lot of the iceberg reveals are only contract quantity 1, right? And you'll see this where someone's buying 8 or 900 lots, but the reveal on the contract is only one. So you never see size on the book. So every time one contract of theirs fills at a tick, so someone's, let's say, taking aggression and filling the bid, right? And one of their contract fills, it reveals one, right? So if they sell 10 into that level, it's just going to be like, you're not even going to ever see 10 on that side. You're just going to see like, the 10 went into that level, but I never saw more than 10 on the book, assuming that there are not other people bidding that level, right? Let's assume that there's only one trader bidding that level for a reveal quantity 1. They could sell 100 and all 100 get immediately absorbed with the reveal quantity of 1, right? And so if I had a tick chart, that tick chart would, a lot of people like to see size with tick charts, right? So I just care about seeing the volume. And if a bar prints quickly at a level with hardly any movement, I immediately know just on my volume chart that there's probably an iceberg there. And if in that volume bar, it only prints with like whatever, a little doji or something, I immediately, or not even a doji, just like one or two ticks, right, of price movement, I know, boom, there's either a huge bidder on the book, in which case I just look at my DOM, or there's an iceberg there. So I can see just based on that there's absorption on that using that volume bar type chart. So anyway. All right. I'm losing motivation to continue doing this. So I think I'm gonna be done. You guys have any questions? I'll just open it up, and I'm happy to talk about what you guys want to talk about. I'm always more interested to do that anyway. That's what gets me off on a tangent or talking about something interesting, is because you guys have a perspective on something. So RG, you're welcome. I'm doing these 36-hour fasts. Pierre Close says, plan for tomorrow. My plan for tomorrow is to trade well and let the market come into my levels, and I got 1,000 other setups. Rule of 3. You got footprint absorption. You got aggression. You got classical chart patterns, bull and bear flags, and head and shoulders, and wedges, and price action trades, where you get second entry shorts and long. I read Al Brooks's books, and I like using a lot of those price action entries as well. So I don't know. I've got a lot of different things that I like to trade. Poor lows and poor highs that suck in short-term traders who want to sell or buy those levels for a break of a poor low or a poor high. So I do the opposite of what I think the dumb short-term market profile traders are doing, right? So there's those types of trades, and there's even tick momentum trades, and then there's DXY is breaking a level and equities are weak. Ha, great, I'll do that. And then I have on other charts in Thinkorswim, I have FANG, right? So I actually keep up in Thinkorswim. I keep Apple, Microsoft, Google, Tesla, Nvidia, and Amazon. So that's my FANG, right? So it's not quite FANG, is it? But that's what I keep up personally. And so I have those all sort of on one chart in TOS, and I keep it up all the time. Why? Because those are some of the highest market capitalization players, and they represent sectors, right? So Nvidia, like the semiconductors and stuff like that. Just excuse me. Anyway, high market cap. So you can sometimes see that there's a setup for the NASDAQ based on where those things are at. So I'll use that even. So I have a big bag of tricks and I'm constantly hunting, right? And I don't let, I don't, they all don't have to align for me to take trades, right? Um, so, you know, it goes back to my whole pin tweet, which is, learn the tools you use, learn them well, build them up over time, and then you'll start to learn, hey, I want to use this tool at this time, and things will make more sense as far as what to use at what time. But it's very difficult for me to convey what to use at what time um, in even a set of videos. It's like, honestly, I feel like it's a lifetime of learning, and I've spent more time than the average trader trying to hone my craft. I've read a ton of books. Like, I don't watch YouTube videos for my education. I buy books and I read them, I mark them up, and I read them again, and I read them again, and then I make them my own, right? There was a trader on the Discord. Gosh, what was his name? He's a ex-firefighter. But he said, I have, and I like his analogy, with trading, I liken it, he says, to having my own beach, right? And I like to hang out on that beach, and I want to add all these different grains of sand to make my beach. But I want it to be my beach. So I pluck, something from this or from that, or a shell from over here and over there, and I want to make it beautiful. But I make it my own, right? And so I'm doing a poor job of explaining how his analogy, but I like the way that, oh my gosh, I think gardeners are here and they're right outside my window. I'll be right back. Gotta close my window. Holy cow, that was loud. My window was open and these guys they're late, by the way. They're late by 4 or 5 days, so our yard is looking like a jungle a little bit. Not too crazy. But his analogy was that, you make the beach your own by adding all these little things to to your beach, and with trading it's the same thing, right? You keep adding all these little tools, and before you know it, you have something that's beautiful that you've handpicked as part of your tool. So for me, and for some people it's different, but for me, I'm happy to have a bunch of different tools that I know when to use them, right? Just like a gardener has, who's right outside, right? They have weed whackers, and they have trimmers, and they have riding lawnmowers, and they have rakes. They don't just use one tool for everything. But what I find is that a lot of traders dumbly say stuff like, you got to keep it simple all the time and do what works for you, and I use my one tool for everything. That's great, but you're going to have less setups. So continually, my advice is learn the tool and learn it well and where it should be applied, and then learn a new tool, and then learn when does that need to be applied. And if it gets to the point where you have too many tools and you're starting to be confused about which tool to use, then take away a tool and say, I'm not going to use that one, until you can kind of wrap your head around which tools again. And it's like anything. You're not going to learn to drive an F1 car and compete at the highest level overnight. You got to first start, with strengthening your neck muscles, and driving in a lower level against people who maybe aren't as aggressive, and things don't happen as quickly. And yeah, trading is the same thing. Let's see. Posted VWAP question above. Yeah, maybe brown dog, maybe. I used to use tick charts, and you can derive things from tick charts, right? So when you have a volume, because it's a tick chart and it's based on a trade, when you have a volume bar that's higher, you know that the size within that bar is bigger, right? So you can derive things from tick charts that you can't with volume charts. But that's why on my volume chart, I have the round sort of the bubbles that show me big size. So and that's why I do it that way. So different ways. It's all the same thing, right? You're just looking at size, volume, speed of transactions, how does it move price, right? All derivatives of these same things. And you can pretty much measure a lot of the same things as long as you think about it differently as you know, use a tick chart versus a volume chart, and then recognize that you may need another tool to add to the volume chart that maybe the tick chart will tell you a little bit more in terms of you can derive, say, the size or something if you have a volume on your chart or something. So anyway, posted VWAP question. Let's see. Do we have, so James Ferreira says, do we have a way to ID highest volume VWAP of X bars back the way we can in number bars when max values? Or highest volume numbers bars X bars back and launch a VWAP? I've written it in Pine, but just learning C++ and not there yet. I don't know coding, so don't know if there was something similar already in Sierra. I don't know. You know, James, this would be a great question for you to go ask Zip on his forum. So if you're not there, and I know Zip's been really busy with life stuff lately, but tag him on his forum and ask that question. I would bet he would love to discuss it with you if he's around. And I've been emailing with Zip, but only probably once every week or two. He's just so busy. So, and that's unfortunate because I love talking to Zip, but he's just not. He's been busy with life stuff, so that happens. Let's see. So we're on this market data chart. I think the last one we were on was the footprint. We've already gone over the TPO. We've already gone over the daily, the COT, 30-minute, all the footprint stuff. Let's see. I can switch it. I'm so happy that the gardeners were here. I was just going to have to call the property management people or text. Let's see. Right. Top 49. Right side. It's this one. Okay, sorry about that. I have all these OBX screens set up here. Takes me a little bit of time. Do you guys have any other questions here on it's already 1:50. Futures opens in an hour and 10 minutes. I'm excited. Anyway, Pierre, 36-hour fast. Yeah, man. It's been I've been really enjoying how I feel fasting, and I need to lose weight. So, and it's working. And I don't know. I feel amazing after fasting for that amount of time. Yeah, so I've been doing it off and on, some 24 hours, some 36-hour, and then eat, and then yeah, it's just been good. But I'm eating a lower carbohydrate diet, so I'm more in ketosis. So I'm burning fat for fuel, and I'm pretty much adapted at this point. So, you know, the last time I ate was last night around 6 p.m. It's almost 2 p.m. today, and I'm not hungry. I'm good. I've got plenty of fat to burn. But you guys have any questions on or anything you guys want to talk about with footprint or I don't know, these volume bar charts? So RG was asking about the volume. I mean, do you want me to show you the settings? I'm happy to do that. Here. do a market depth historical graph too. Let's see. What a mess. What a mess when you add this, huh? I have it bookmap style up here. Let's see. Highest quantity will go 400. Lowest quantity we'll keep it at 7. So there you go. You can see at the close I maintain Sierra Chart doesn't do a great job with their heat map. It's not terrible, but it's not great. I don't know. It is not great. Hey, look at all that liquidity down there during RTH. And they only added the liquidity once the market came down close enough to it. See it as the market started to sell off here, come down to lows. So they added the liquidity at this point. Stayed there. Once the market moved up and away, they removed it. So I find that interesting that they're adding and pulling liquidity as the market moves up and away. Lots of assumptions there, but sometimes you can see that the market will react to the liquidity, so that's kind of cool. Let's go look back at the chat and see. James, you're in Vegas. Nice. Yeah, I am in Clovis, so I am in the Central Valley, and I'm looking to move to San Luis Obispo once the little one gets a little older, and the grandma is here, so she would be very unhappy about that. So I'm not gonna say that again loudly, but that's the plan. We had our brother, my brother-in-law and his wife moved there, and we want to follow them over. Just the baby's got to get a little bit older, so then we're gonna head that way. So we don't like the Central Valley, but we do like being near all of family, grandparents, all that good stuff. So anyway, market depth historical graph. We'll turn this off. Hey, so ask volume. Let's see. Transparent line. So that's volume at price threshold alert version 2. You see that? That's a heck of a name for a study. Volume at price threshold alert version 2. I always get that wrong. So I called it, I think, something else earlier. So a comparison, ask volume, bid volume difference, volume threshold. So it's not 900, it's 800. See that? So when it's 800 out of 1,000, on the ask side, then these extend out, right? And so there you go. And then you use, for the extension, you use this one here. And see how it's, the width is 5, right? And that gets you that width here like that. Right? And then it's 75% transparent. The transparency is somewhere in here. Draw lines until end of chart, right? So if I set this to no, maybe this one won't come and go to the end of the chart. We'll see. Nope, it doesn't. But I don't do it that way. I do it to where even if prices pass through it before, they're extending out. And this chart doesn't have that many days loaded into it, so I know that I'm seeing something that was somewhat current in terms of recent price action. Where's the transparency? Yeah, draw extension lines with transparent range. There you go. Yes, that turns on transparency for these things. So yeah, for the whatever, the ask volume, it's positive. For bid volume, it's negative. So negative 800. See that? So same thing, but inverted, and then the colors, oops, get inverted. That makes sense. Should make sense. See? And again, it's there's transparency. Oh, I'm so happy that the lawn is getting cleaned up. I hate dealing with property management. I just hate it. There's always this delay. So let's see. What else do we got here? "30-second opening VWAP, right? All that stuff up here. T1s. Volume by price over here. I do visible bars. I don't know. What else do we got? What else do we got? I'm just hanging out. I'm not eating. I'm not eating until tomorrow morning. So it's not like I have somewhere. You know, when you don't eat, sure saves a lot of time. I've got some fancy pants green tea coming. It's like in crystallized form, so it's good hot or cold. It dissolves well either way. But geez, it's like 45 bucks for 28 cylinders. So 28 separate servings. It's not cheap. But is it snakeskin oil? Maybe, but we'll see. When you're not eating, $45 is cheap. At least that's what I think, but well, whatever. What else do we got here? Is there any other questions? If you guys are quiet, I have nothing to say. I'm an open book here. You guys want to ask questions about things? Go ahead. I will. Otherwise, I'm going to give it a few more minutes. I'm going to get off. And I'm going to chart the NASDAQ really quick, and not show all of the charting, and because that takes a little bit of time. I'm just going to pop it out. All right. I'm going to give it till 2 p.m. my time, which is 5 p.m. Eastern. That'll give me like 15 minutes to do the NASDAQ. Exactly like I did the E-mini. How long is this video? Is it 2 hours yet? 3 hours. Holy cow. Nada? Alright, well, good luck trading futures this week and tonight. Hopefully it's interesting, but we've got a bunch of volume between 39 and 30. And so that may pin things for a little bit, right? Unless someone takes initiative below that level, and then some of the hedgers kick in and they start selling things, and then it could accelerate things to the downside. Could also do the same thing to the upside. We have all that LVN, low volume node, or area, lack of node above us. So that's interesting too. So it could be interesting tonight, or we could just, because we have so much volume here, we could just chop around and do nothing tonight. Lots of potential scenarios. Let's see. Yeah, I think we're good to go. All right. Everyone's quiet, so good luck. Thanks for watching. Have a good one.